The growth of credit card use in emerging economies signals continuing financial development of these markets. But how can we understand what different countries need when it comes to financial inclusion? With me now is Ann Cairns, President of International Markets for Mastercard. Well, Ann, obviously Mastercard is growing 5 times faster in emerging economies as it is in the United States. So what does this mean for emerging economies in terms of spending patterns and also development?
Well, obviously there's a big secular shift that's going on from cash into electronic payments, and that's why you're seeing some of these growth rates in some of the countries in the world. Sometimes governments are driving that shift, and they see that it's very good for their economy to reduce the amount of cash, because not only does it save them money, sometimes up to 1.5% of their GDP, but it also increases transparency and it really allows commerce to flow.
Why is financial inclusion so important for emerging economies and in turn the world economy?
There are actually 2.5 billion people on the planet today who don't have access to any type of financial products. And you know, interestingly, there's something like 93 million people in Europe. And if you're actually excluded from the financial system, how do you do things that we would expect to do in everyday life, particularly in places like Europe, where you might want to buy something on the internet, you may want to buy an aeroplane ticket or a train ticket, and all of these things start to happen electronically now. So you don't have access to that. It has a big impact on your life.
Well, we will talk about emerging economies, but just staying with Europe for the time being, and how are you addressing financial inclusion in this area?
One of the best examples is actually Italy, because 20% of the population who could have bank accounts don't have bank accounts in Italy. And what the Italian banks have done, have got together and created a prepaid environment where they put actually account numbers on prepaid cards, and you can spend on the card, you can receive money on the card, and so they've created effectively a light bank account which really helps the population.
So now, what markets are Mastercard focusing on in terms of credit cards, and why are you choosing these markets?
Well, we're actually in over 210 countries and territories, so we're pretty much focused on the whole world. You know, we look at some countries that are going through major change cycles, such as, for example, India, that's rolling out its national identity program, Nigeria, that's doing a similar thing, countries like Mexico, where you have a lot of different companies now trying to reach the small business providers, companies like Brazil, where you're starting to see a revolution going from card to telephone payments. And we work in all of these areas with partners on the ground to just try and reach the consumer in any way that works for them.
So how do you approach the different markets? Do you have a sort of one-size-fits-all approach? We
definitely couldn't do a one-size-fits-all philosophy, because, I mean, obviously there are big cultural differences, there are big timeline differences between where a country is in its development. I think, though, you could say that a tremendous amount of people have mobile phones now, and so the level of mobile phone readiness is high practically everywhere in the world. And that's why, you know, we're not just working with 1 or 2 mobile operators, we're working with them, you know, across the whole world. So people like Docomo, like in you know, Japan, Telefonica in Latin America, Deutsche Telekom, and Weave here in the UK, because what we're trying to do is keep pace with what the market is demanding in the various countries. So, for example, here in the UK, you're seeing things like you can get on buses now, London Transport, and just tap with your card. You'll be able to do that with your telephone, because near-field communication is being rolled out here. In some of the more emerging economies, you'll probably see mobile phone be used much more often than point-of-sale machines, because the infrastructure isn't there in the first place. So those economies can actually leapfrog and go to mobile more quickly.
Is it more difficult than in emerging economies? Because obviously they need to catch up in terms of financial inclusion, but then you've also got, you know, the rate that technology is advancing. So does that cause problems?
No, I think that the rate that technology is advancing actually helps the situation, because when we started to roll out capability in Africa, there weren't the landline infrastructures that we would have piggybacked off in previous geographies. So we started to roll out satellite technology to actually hook up to our global network. So these things actually advance what's happening.
Well, how do you approach countries such as China, for example, where companies might have the monopoly in that country? Obviously, China has UnionPay.
We've been working with UnionPay for a number of years. If you were in China, you would see actually cards that are co-branded Mastercard and China UnionPay. And what happens is the Chinese cardholders can use our network when they're traveling, and UnionPay network isn't available to them. So we actually have quite a good coexistence on the cross-border side. I mean, obviously we're very keen to do more things domestically in China, and we're thrilled that the Chinese have actually agreed with the World Trade Organization that they will open up to foreign companies to play in the local arena, but we're just not sure exactly when that's going to happen.
Anne, thank you.
Thank you very much.